Senseonics Incorporated recently received a downgrade from research firm Raymond James. Senseonics Incorporated was granted 2 new patents this month in March 2021. And what exactly happens to your cash-secured put options that get assigned to you whenever the strike price is not met? What's up, guys? Welcome back to the channel. My name is John and this is John Paul Investing. So today I wanted to talk to you guys about a recent downgrade that we received just this month on Senseonics Holdings. I don't think they're necessarily wrong about the comments that were associated with the downgrade, but in the long term and macroeconomic environments, I'm still very bullish on Senseonics Holdings. Regardless of the downgrade, the stock has a lot of room to grow, and we are still waiting on this patent pending approval for their 180-day Sense XL. For those of you who don't know, this is a continuous glucose monitor that diabetic patients and pre-diabetic patients could potentially use to monitor their glucose levels, which is via an implantable interstitial device that goes inside the arm, which only needs to be calibrated once per day as opposed to the normal maybe 3 or 4 times a day that we're used to seeing. Essentially, it's made to improve the life of diabetic patients who want to track their glucose levels but not go out of their way to do so. Now, before we got into the video, guys, a great way to support the channel is to simply hit that like and subscribe button. Not only will you get notified when I make videos, but it is also a free way to show your support for the channel. And also, you can get 2 free stocks using the link in the description. All you have to do is open an account with WeBull using that link and deposit $100, and then you will get 2 free stocks, which you can then sell and do whatever you want with that money. It literally is risk-free money, guys. So right now, I am on benzinga.com, and we are looking at the Senseonics Holdings analyst coverage, and essentially this is just showing us any of the upgrades or downgrades or any of the maintain calls against Senseonics stock, along with the dates that these actions were taken. So we had a bunch of maintains from the early onset of CV19 last year in March of 2020, all the way through around close to August, whenever we received our first upgrade in Senseonics stock. And then after the initial bull run from around, just pennies on the dollar up to, $5 for Senseonics stock, we started to receive downgrades in the stock. And it has stayed this way since, of course, with the most recent being on March 5th by the research firm Raymond James. And the previous one by SVB Leerink actually came with a price target. They had a price target of around $3 for Senseonics stock. This one by Raymond James does not exactly include a price target, but they did leave some comments for us to look at, and I have them pulled up here. The actual analyst who made this downgrade at Raymond James, his name is Jason Bedford, and he downgraded because of this comment here. We are downgrading Senseonics to underperform as we believe the year-to-date move makes the risk-to-reward profile unfavorable. We hold management in high regard, but we simply believe Senseonics is an overvalued asset that will take time to grow into its valuation. While there is likely modest upside to estimates, we expect the multiple to compress at a faster rate than sales upside, which makes it a relative underperformer. We make no material changes to our model. So what he's saying here is that the price has already moved to a point where the risk to reward profile for what the business is doing right now is unfavorable for them as a research firm. They believe it is an overvalued asset because of the recent price hike that we got in Senseonics stock, and that it is going to take some time for the price of the stock to grow into its true valuation intrinsically based on their sales, their earnings, things like that. But for now, to them, it is simply an overvalued stock. Now, while I can see why they would say that it is overvalued at this point, the fact of the matter is that right now they still have the competitive edge in the continuous glucose monitoring market right now. And the fact that they're looking at it from a year-to-date perspective, which is essentially just from the beginning of the year up until now. So I believe they're talking about 2020, the full year, or they're talking about just January this year up until March, basically the first quarter of the year, based on those earnings. It really doesn't do justice whenever they say the asset is overvalued, because there really isn't many Senseonics holdings out there to invest in. This is a one-of-a-kind business right now with the product that they have. And we already know the macroeconomic environment is pointing towards inflated assets. The Federal Reserve is keeping interest rates at historically low rates, and the Treasury is just printing money like crazy right now. So what this is going to do is it might not affect normal, consumer things like CPI, like the CPI basket, for example, like, groceries, milk, water, buying gasoline. You know, we've already seen gas prices go up, but in general, the things that's going to experience the most inflation over the next 3 to 5 years is going to be scarce assets. While the dollar gets hit and starts to lose purchasing power, the things that are going to experience this the most are scarce assets that people are going to be fighting over to hold to secure their long-term wealth. At some point, everyone's going to have to start thinking about their future. And to say that it's overvalued now is going to be an understatement, maybe 5 to 10 years from now. So while I think that in the maybe short term, maybe the next few months, possibly even the full year, maybe even next year, that it could be overvalued, but I think that you should take the overvalued asset with a grain of salt based on looking at other possible opportunities in the market right now. Whenever you're investing, you want to be an active learner in the investing world. You don't want to be an active trader in the investing world. So you don't want to be jumping in and out of positions just based on, you know, looking at other analyst ratings and things like that. You want to actually look at the substance behind the business that you're investing in. And, you know, based on their downgrade, I don't think they were able to substantiate it enough to downgrade it to a point where they think it is where it deserves to be a downgrade. I think that it should at least have maintained its position, not a downgrade, but just maintain. Of course, at the time of this article, Senseonics was trading at around $2.69, and we just saw a price run to a little over $3.30. And now we're sitting right around, you know, $3 per Senseonics stock. But anyways, that's enough for the, you know, the analysts and, you know, looking at just Senseonics price and stock price. We should look at, you know, what they're trying to do and use that to, you know, fuel our conviction and investing decisions in Senseonics. So just this month, we actually had 2 new patents approved for Senseonics Incorporated. We had the first patent on March 2nd of this month. It is patent number 10932703, and the second patent being on March 16th, which was just a week ago. This is patent number 109456444. So the first patent, I believe, is the actual sensor that's under the skin, and then the second patent is actually just the process of how they collect the information and distribute it into like the network, into your smartphone, into the devices. The second patent is more for the monitoring system for the SENS. So these are fundamental things for the business that are positive for the business, but Wall Street does not always see positive fundamentals as a positive thing for the stock price, because in Wall Street, generally, it is a market that likes to be timed, or at least tried to be timed, and is generally short-term and manic in nature. So chances are we're going to keep going sideways for a little while, especially within the 50, 100, and 200 moving average. We're pretty much trading in this area that is a little indecisive, and the longer we trade sideways, as I've always said, guys, the chances are that we're going to see some explosive movement either on the upside or on the downside. If we go to the downside, then it becomes inherently less risky to own this stock, because the stock price is going to be cheaper, therefore making it cheaper for you to own the company if you are a new investor or are accumulating more into this company. If it pops up in price, you don't want to be chasing the stock. You essentially already want to have that conviction built up in Senseonics as an investment. So that way, before the rise actually happens, you had your chance to accumulate the stock and you weren't really trying to time it so much. I did hear from another YouTuber that CV19 is possibly going to push back the FDA approval probably beyond June of this year, May or June. Of course, in my other videos, I was saying that we should expect it sometime before June, but in the event that we don't hear it by June, we might have to wait another 6 months, possibly to the end of this year. If we're lucky, we would get it much sooner than that, but if we don't get it by, I would say maybe sometime May, there's a chance we might not see it until beyond June, and possibly even like August, September, something along those lines, maybe third quarter of this year. But if we don't hear from the approval, I am almost certain we should hear something from the leadership at Senseonics. They shouldn't leave their investors guessing, 100% guessing. They should at least give us some idea of where they are in the process of getting it approved. Now, as far as our Senseonics stock and the put option that we received, as you guys can see, I have an average cost of $5 for Senseonics stock at this price, Why do I have a $5 cost basis? Well, that is because I sold a $5 cash secured put for Senseonics expiring on March 19th, just last Friday. So I sold the cash secured put, meaning I put up around $17,500 in collateral, promising to buy Senseonics for $5 a share around the end of February last month. And the whole point of this put option was to hopefully get beyond $5 in stock price before the expiration date. But of course, obviously that did not happen. Senseonics is $2.99 right now as we speak, which means that I am down around 40% on my Senseonics stock holdings. But you have to remember, I also did collect a premium. So if we do account for the premium, it was around $3.68 was my break-even price. So I would just have to do 68 cents times 3,500 shares, which gives me around an actual adjusted net loss of around $2,380 and not quite the $7,000 that it's stating here. Also remember, I did this with Nano Dimension. I put around $12,500 for 1,000 shares. So with Nano Dimension, my strike price was $12.50, meaning that we wanted Nano Dimension above $12.50, and right now Nano Dimension is trading underneath $10. But the losses were mitigated to some degree because at least now I have the shares that I wanted to own in the first place, and I did collect some premium up front, so it did kind of cushion the losses, but I'm still comfortably holding these stocks because I believe in the underlying business. Now, if you guys want to know exactly when I'm buying or selling the stocks that I talk about here on this channel, including any of my Bitcoin purchases, I highly recommend you guys go to the Patreon group in the link in the description also. This is a place where you can connect with us on the Discord community or the Patreon group itself. It is a great place to learn, especially as a new investor, and framing your mindset correctly as an investor. So go ahead and check out that link in the description before spots fill up. And lastly, guys, don't forget to claim your 2 free stocks from WeBull. All you have to do, again, is open an account with them, deposit $100, and then you get 2 free stocks, which you can then sell and do whatever you want with that money. But anyways, guys, that is it for this video. If you liked what you're watching, please go ahead and hit that like button. And while you're down there, go ahead and hit that big red subscribe button. And don't forget to hit the bell notification to get notified when I make videos just like this one. Thank you guys so much for watching, and I'll see you in the next video.